Welcome back to the program. Our conversation for today is focused on the IMF Article 4 report on Nigeria. Now, according to that report, the IMF says the Nigerian economy at 6.8% performed strongly this year and is expected to grow by 7% next year. I'm being joined by an economic analyst, and he's also a lecturer with the Department of Economics of the University of Nigeria, Nsukka, and Dr. Patterson, Ekeocha. He joins us live from our Abuja studios. Thank you so much, Doctor, for joining us this morning.
Thank you for having me.
Well, I already asked the Director of Communication of the Central Bank of Nigeria, that's Mr. Okonjo-Iweala, for this question, but I'll still ask you, because you're an economist, you should give us an economist perspective on it. Now, the IMF affirmed that Nigeria's economy has actually continued to perform strongly, at least for most of this year, alluding to GDP growth and inflation. And so what I ask is, are these indicators sufficient to return this kind of verdict on Nigeria? From an economist's point of view, is the economy really all about GDP and inflation?
I'll start by saying that the statement made by the IMF Mission Group at the end of the consultation validates the country policy and institutional assessment that the World Bank did last year, scoring Nigeria high in the area of economic management as well as structural policies, economic management policies and structural policies as well. You see, much as the economy doesn't hinge on growth, but growth is very essential, because with high growth you really can reduce poverty. But aside from that, there are other macroeconomic indicators, just like the stable exchange rate. The exchange rate has been stable over time, and kudos to the CBN. Of course, this year we had the inflation rate coming down from double digits to single digits, 7.8%. In fact, and the CBN governor said he's going to pursue that by next year. And that's very key, at least for investors, because if inflation is low, it's definitely a good omen, at least for investors, even for household and consumers as well. So it's a step in the right direction, considering all that they enumerated. In fact, they gave kudos to fiscal policy management, monetary policy management, financial policy management.
Okay, so Dr. Ekeocha, we're going to take this one by one. Let's just start with, you already mentioned it, we have seen stable exchange rate. Now, the report actually recommended the adoption of flexible exchange rate to deal with some of the economic challenges that the country is presently facing. What is your take on this? Is this not calling for a devaluation of our currency?
Sorry, please can you take that again?
What I said is that the report actually recommended the adoption of a flexible exchange rate to deal with some of the economic challenges that we're facing. Now, what's your take on this? Is this not calling for a devaluation of our currency?
No, it's not calling for devaluation of our currency at all. And I don't think that the central bank, will be going to devalue our currency for now. Of course, they've been pursuing flexible exchange rate with 3 bands, plus and minus. It doesn't call for devaluation of our currency at all. It just doesn't call for that.
All right, still looking at that report. The report affirmed that fiscal consolidation is progressing. How true is this, especially in the light of high fiscal deficit of the government?
Well, fiscal consolidation has been there for 2 years. Each time the president comes up with a budget, it's part of the fiscal policy, and it has really been on and is really progressing, because over time, for the past 2 years, the Minister of Finance and the Coordinating Minister for the Economy has been able to reduce the ratio between recurrent and capital expenditure, and it's equally ongoing. It's not something that one can just achieve immediately. It's just something that is smooth. It's ongoing. However, there are other public financial management reforms that are ongoing, which include the Treasury single account, which definitely will help government banking activities, such that the Minister of Finance can then oversee, all the MDAs, making sure that all the money that will come into the Treasury and then the payment are made in a timely manner as well as managing the balances. The balances is the balances are very, very important, such that, it reduces the borrowing cost of the government. So the treasury single account is very important for the government, at least for them to pursue that and make sure that we have that.
Well, Dr. Ekeocha, Mr. Ugo Okorafor actually mentioned the fact that the Central Bank of Nigeria, of course, we're seeing most of the policies that they've put in place, especially as regards how the banks operate, the increase in the public sector deposits, that's the cash reserve requirement on public sector deposits, and the rest of the other policies that they've actually brought out for this year. Now, this report by the IMF recommended or commended the monetary policy stance of the CBN. Now, what's your take on this, especially given the effect of tight monetary policy on interest rates and credit, bearing in mind that the mission also stressed the need to ensure adequate credit access is given to small and medium enterprise? Is the CBN doing enough in this regard?
Well, first of all, let me talk about the interest rate, which is part of what they mentioned. Remember, I've been privileged to look at the document, the paper. Pertaining to world economic recovery, that Nigeria has no hand in it. Nigeria has a hand, but it really cannot manage it internally, as well as financial management, and then capital outflow. The issue of capital outflow through FPI, foreign portfolio investment, could be curtailed by the level of interest rate that we have. Interest rate that we have will make capital inflow to come in instead of capital outflow to leave the country. Having said that, you see, the treasury single account, for now, NDAs have respective accounts, and most often it doesn't help for cash flow, cash flow management. Most of the NDAs are complaining that this particular quarter they ought to get this amount, but they are getting lesser. So that the treasury single account will help the Ministry of Finance oversee and centralize the cash management, cash flow management, such that money will be paid timely. All the revenues accruing to the government will equally come in, and then even if the MDAs will have separate accounts, but this treasury single account will make it very efficient. In fact, it's one of the prerequisites for cash flow management in modern day PFM. Okay,
Dr. Ekeocha, back to the question I asked you. In light of all of this, we know that it is to ensure that the economy is oiled as best as possible. Now, looking at the fact that the Central Bank of Nigeria has put out a couple of policies which most of the sectors have actually been complaining, most investors have actually complained about, and as well as Nigerians, the policies are too stringent, and that it should be lessened or loosened a little bit to encourage growth in the real sector, particularly in the real sector, as well as other sectors that need to drive the economy.
Sorry, I didn't get that, Harriet. Sorry about that.
Okay, Dr. Ekeocha, what I said is that we agree that all the other issues that you raised are also contained in the report. But back to the question I asked you, which is as regards the tightening, the policies of the Central Bank of Nigeria, that's the monetary policies now that it has actually come up with. Some investors and most investors in the real sector complain that they're too stringent, that they're too tight, they don't allow for easy access to credit and the rest of it. Now, could it be that the central bank should be thinking about reducing or loosening its monetary policy stance to encourage more growth in the real sector?
Well, let me start by saying, part of the objective of the setting up the central bank, part of the objective they pursue is to make sure that we have low inflation. And if the central bank is unable to do that, of course, it will affect all the sectors of the economy, especially the consumers as well as the investors. I see the tight monetary policy measure as the step in the right direction. And remember, usually the central bank will come having having the monetary policy, and each time those of them within the monetary policy will come, I guess about 12 of them, and then vote. Most times we'll have the minority vote, 1 or 2, but these things, before they reach a verdict on what the MPR, the monetary policy rate, should be, it would have been informed by research, it would have been informed by those of them in the monetary policy department, and then they come up with that. Yes, they are crying that that rate is high, but at the same time, there are other things that the thing is helping us to do. Once the inflation is high, remember in New Zealand, if, of course, if you are made the CBN governor, so to say, of that particular country, and you're unable to achieve low inflation rate, you take a walk. In fact, it's a step in the right direction. However, it may not continue over a long time. By the time they come back again on a quarterly or yearly basis, and they decide to revisit that, and macroeconomic fundamentals have changed, and the real sector equally in performance has changed, they may relax the issue of the interest rate. But for now, the monetary policy rate, I guess, is at 12.5%. It's not a step in the right direction. It's just 12%. To make sure that we have macroeconomic stability.
All right. Well, just before I let you go, going forward, should Nigerians be expecting more favorable policies in the coming year that could further galvanize the economy, and not just be numbers on the paper, mind you, but physical improvement in the lives of Nigerians?
So please, can you take that again?
Well, I said, going forward, should Nigerians be expecting more favorable policies that could further galvanize the economy and not just be numbers on paper, but physical improvement in the lives of Nigerians? You're an economist and you see the numbers just as well as other, like you said, mentioned, other members of the Monetary Policy Committee and, of course, the Central Bank of Nigeria. But then we expect to see not just numbers on the paper, but physical improvement in the lives of Nigerians. So going forward now, what really should we be expecting from the Central Bank of Nigeria? The central bank is an interplay of fiscal policies as well as monetary and financial policies. The central bank has been doing a yeoman's job. They've really been trying. When it concerns the monetary policies as well as financial policies, there are steps in the right direction. At the fiscal end, the government has equally been trying. In fact, realize that, and in fact, part of what the IMF Mission Group suggested, that we should look at the issue of security and then look at trying to put in the infrastructure that will help the economy to grow, and government is doing that. Remember that we have 11 distribution companies, and then we have 4 generating firms now. Of course, the PSCN has been privatized. It's a step in the right direction. We are looking at, maybe in the next year or next 2 years, what that will dovetail to. And of course, the multi-year tariff order, they said there's not going to be, of course, I keep watching and then following the trends. They said there's not going to be any increase in tariff, which is a step in the right direction. So I see that as part of the policy that will help not only the investors, but as well the household, the consumers, so that we create stable macroeconomic conditions such that, it will be a win-win situation. I see that as a policy in the right direction. Well, thank you so much, Dr. Patterson Ekeocha, for joining us this morning on the program. I'm afraid that's not much we can take from you, but we do hope to have you on the program very soon again. Well, I've been speaking with an economist and a lecturer with the Department of Economics of the University of Nigeria, Nsukka, Dr. Patterson Ekeocha. He joined us live from our studios in Abuja. But that's the program for today. Thank you so much for watching. I'm Harriet Agbeni.